Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we're just going to be discussing how I perform a comprehensive stock analysis. This is very tailored though on how your risk tolerance is. Are you someone who can weather a lot of volatility, big moves up, big moves down? Are you someone who's nearing retirement and you want to put in something safe? Maybe like the S&P 500 just goes up 10% every year for the last 50 plus years? Are you someone who is retired and you actually want to put your money into dividends where you get paid every month or quarter? Or are you just someone who wants to set it and forget it on an ETF, which is basically, think of the S&P 500, the top 500 stocks. They manage the 500 companies. You don't have to ever do anything. You just set it and forget it. You can do a set it and forget it on any type of asset, by the way. You can do it on security. You can do it on high growth stocks, value stocks, income stocks, which are dividend stocks. So you need to figure that out within yourself. But when it comes to looking at stocks and feeling comfortable about what you're investing in and making sure you are making the right decision, I will show you how to do that in a couple of different forms. There's a few different sites that you need to familiar yourself with if you are investing on your own and taking uh, your financial investing into your own hands, which I recommend. I'm not a financial, I'm not a licensed financial planner or CPA, so don't listen to anything I'm saying. But a lot of those companies charge you up the wazoo and for perpetuity. And doing this yourself, I mean, you can get income stocks. If you're going to retire, have that money come straight to your bank account. Don't deal with the third parties, whatever. I'm done ranting. Okay, so what you need to do if you're taking your matters into your own hands and you want to invest in individual stocks, number one, you have to use FinViz because they will give you all the data points. We're going to look at a company together that maybe a lot of people don't know. We're just going to choose Thermo Fisher. And I don't know anything about this company particularly other than they have $1 billion plus. You need to check and see what institutions and hedge funds are doing. Are they secretly loading up? Are they secretly dumping? That kind of stuff. You need to create a book for yourself based on different screeners and scanners that you make within FinViz. And I'll just touch on this briefly. So you create all these different tabs down here, and they're going to hold all of your results from your screeners. So you can see I have a ton. And it goes on. And then I have another one for my Ryan Makes Sense account. So this is actually two massive spreadsheets. And then you need to take partial action. You need to log them into another separate spreadsheet of when you believe there's going to be an area of opportunity. I call this the apex, where support and resistance converge like this. And the stock is either going to move up or down, depending on if the company is doing well, insiders are buying, hedge funds, institutions are buying or selling, or maybe there's a new law passed, etc. So keeping an alert here for all those different stocks is going to help you. And just kind of going back to my screener comment. So basically you can look at all these different financial parameters, and I'll go ahead and just briefly talk about them. You have your stock price. Do you want stocks under $5? Do you want stocks over $100? Do you want stocks over $1,000? Do you want the float, which is the shares available, to be under 100 million? Do you want gross margins to be over 20%, 30%? Do you want the market cap of the company to be really small? Maybe you're trying to find the next Amazon, or are you looking for something that's super stable like Netflix, Amazon, Google, you know? Are you looking for a stock that's in another country? Are you looking for a stock that's anticipating high growth for next year? Are you looking at a stock that has insiders, that has ownerships? Or if you're looking for insiders that are buying or selling, are you looking for companies that are debt free? So you can do all this and then you save it and then you end up with your own, all these screeners right here, and you then track them. And then the last thing you need is a platform that you use to chart stocks. I use Thinkorswim. It's free. There is a little bit of a setup. You have to sign up with Schwab. I believe it's free. If you want to do a web-based version, there's also TradingView, which is almost as powerful as Thinkorswim, but I think Thinkorswim is a little bit more intricate with their drawings and their studies and how you can craft your perfect screener or technical indicator, Ichimoku clouds, MACD, stochastics, Fibonacci fans, Fibonacci arcs, you name it. So I prefer Finviz, or I'm sorry, I prefer Thinkorswim as my platform of choice. So how do you determine if you find a stock and it's comfortable for you? There's a very extremely high level, just look and be done with it, or you could do what I typically do. And I typically run through this. We look at the market cap, the income, the sales. We then look at the cash and the debt, and then it kind of gives us an overall potential stock price. And we'll do it with Thermo Fisher just to give you a sneak peek. So basically, you're looking at all this information. Maybe it's overwhelming. You don't really know. So what we're looking at together at the moment, where we don't know anything about stocks, we're trying to become comfortable with investing. We want to look and see, depending on what version of Finviz you're using. If you're using the free version, you will see all this. My head is in the way. Let me just shrink it really quick. Shrink dink. Okay. With Finviz, the free version, you only get this table right here. You won't get these three graphs. So we'll ignore the three graphs down here because I was able to get the 7 figures, believe it or not, with the free version of Finviz and doing the same exact steps I'm showing you up here. Well, you can't see them, but the tabs that I showed you, the stock book, the master sheet, what institutions and hedge funds are doing, creating multiple screeners and analyzing the data, and then charting it out. So that's the process. Now looking here, how do we know if this company's doing well? So just kind of looking down, they make 42 billion. That's fantastic. What you'll want to do, because this is also, I believe, part of the free version, is go down here and you can see the annual. And they made 42 million trailing 12 months. They're at 42 billion. I said million, it's a billion. 42 billion 346 million. Last year they did 42 billion 857 million. 2022 44 billion 915 million. It kind of looks like they've plateaued a little bit, and we're not sure if they're going to break the mold here. We do have to consider they are in the S&P 500, so the more people buy the S&P 500, the more their investments, their cash, goes into this Thermo Fisher. It's not going to be a lot because it's spread out over 500 companies, but it's still it adds to the value of Thermo Fisher, adds to their market cap. So they make 42 billion. They offer a dividend. Typically, if you are into dividends, you are maybe getting closer to the retirement age, or you're looking for something in your portfolio to stabilize and be kind of like that level setter, you know? And we can look at the overall chart here for Thermo Fisher. I like to look at the bigger picture and then whittle my way down. And as you can see, Thermo Fisher is trading at the same levels as it was back in October of 2021. And it's done really well since, I mean, it's done really well over its whole life, but it's done well since October 2023 when you could buy it at $423. So, and then a lot of high level investors, think of your Warren Buffetts, a lot of the bigger companies that have a lot of money, they typically just look at the price to earnings and the forward price to earnings. And basically what the price to earnings essentially is the amount of the period of payback. The price to earning right now is 37. I think the sweet spot, the nice bread and butter sweet spot, is 15 or less. And we just saw Mr. Warren Buffett, he purchased Sirius XM. We'll just look at that just for an example of what like the billionaires buy. And then the forward PE is a 25. So based on this, typically maybe this is a little on the higher end for most people. Maybe you want to be 15 price earnings currently, and then the forward PE is maybe like a 10 or 11. But what this goes to show you is that currently this is slightly expensive, but in the future, based on sales, gross margins, EPS, profitability, operational margins, etc., operating margins. This company is going to be undervalued in the future. Think 2025, because we're going 2025. And back onto the price to earnings and forward price to earnings. Look at SiriusXM. They make $8.9 billion. They are profitable. Their price to earnings is 8.13, so that is very cheap. Again, 15 is like the sweet spot. Quick ratio, that's another thing you want to consider, but we'll just keep this super simple. So there's the price to earnings here. So that's something you want to consider if you are just trying to do a quick glance and be like, this is a little too expensive, I want to wait. If you are someone who wants to dig a little deeper, someone like myself, I do have this calculator. Feel free to copy it or create your own. I don't know if it's linked in my video or my description below, but essentially we plug all these numbers in. Why isn't this deleting? Okay. So we have a market cap of 233,530,000,000. They do have income of 6,220,000,000. And they do sales of 42,350,000,000. All right. And then now you can see, okay, this company has a little bit of debt and they have long-term debt that's less than their total debt. So it looks like they are actually addressing their debt, paying it off. Quick ratio, you normally want that to be over 1. That means if they were to close their doors tomorrow, they'd be able to pay off any debts, loans, notes, etc. And you can also see right here the earnings per share and the sales for the past 5 years. Typically, you also kind of want those to be positive unless you're researching a company that is cutting edge, or maybe they're just turning a new leaf and you just found out about them and you can see the data that they're actually producing real results, and maybe you're getting it at the bottom when they're still showing negative data points here. Gross margins, this is going to be totally on you, on your comfortability level. The lower the gross margins, and as long as they're profitable and growing, EPS positive, they have a solid quick ratio. Typically, you want this to be over 15 plus. Anything over 30 is considered high growth. And again, profit margin, you want this to be positive unless it is negative or slightly negative. And you can see that the company's actually, with the data, you want to use the data, you can see that the company's actually going in the right direction to becoming profitable. So that's huge, because if the company is becoming profitable while we're still seeing negative data points here, you might be getting in at a great time, because you're going to potentially get in on the ride of them becoming profitable and a stronger, more balanced company. So that's all that. Now we're going to go back here, and I like to do quarterly for my calculation here. So they have 10,541,000,000 in cash, and debt they have, come on, where's their debt? Oh, I was looking at the wrong thing. That was their revenue. You want to make sure you go to the balance sheet when you're doing this calculation, because if you don't, you'll look like a dingus like me. So 7,073,000,000 cash. 7,073,000,000. Yep. And debt, total debt, 35,405,000,000. All right. And then another thing you want to look at is, does the company have more assets than liabilities? Total assets, 98.4 billion. Total liabilities, 51 billion. So assets dwarf liabilities almost 2 to 1, almost. So that is solid. That's great. That's fantastic. And then you can go down even further on FinViz. You can see if insiders are buying or selling, if they're swing trading their stock. Typically, for me, preferably, I like when CEOs are buying their stock in good chunks. Not the onesie, twosie, 1,000, 5,000, 10,000, but like hundreds of thousands. Okay. And we're going to take this and we're going to look at shares outstanding of 386,650,000. So this is giving us a stock price of, drumroll anticipation, $656. Analysts have a target of 634. Wells Fargo has a target of 670, Jefferies 650, Citigroup 620, and the stock price is at 611 now. So there is some potential room for upside here. Um, and again, if you want to be in one single stock, you will have to ride the waves of volatility. Versus if you're in the S&P 500, typically the S&P 500 goes up about 10% a year on average. So you have your quick looking at a glance of the stock, and maybe this is a little expensive. It really depends. Maybe you have to do your homework, see what kind of products, services are launching for this company. But I like to look at the stock and the facts that I have in front of me. My projection shows that there's actually room for this to continue to grow. And I also like to couple that with technical analysis. So again, looking at the RSI, the momentum, the money flow. The money flow is huge. And the reason why you also want to check what institutions and hedge funds are doing, because FinViz is not the most reliable site when it comes to updated data. What do I mean by that? We see that institutions own 92% and that the money flow, where did it go? Am I tripping? Money flow is up here. Money flow is, it's not at all-time high, but you can see it's kind of just creeping up. So again, 92% is old data. New data shows that institutions actually own, drumroll, 101%. So that's about a 9% increase. So institutions are actually buying this now. And I'm recording this on September 8th. And the last filing that came in was, why is it out of order? There it is. September 4th. So that was, today's a Sunday, that the last transaction was last Wednesday, last institutional transaction. And then you have 829, which was a week, 8 days ago, 9 days ago, actually probably like 12 days ago, 11, 12 days ago. So institutions and hedge funds are buying. So that tells me there's interest with big money. My calculator shows me that there's potential upside. Again, the price to earnings here does show it's a little expensive, but now that we know institutions and hedge funds are buying, and this is trading at 2021 levels, has the stock done better than they did in 2021? We can go, I like to look at that, but we'll just go down here for, excuse me, the free version's sake. Oh my gosh, why am I hiccuping so much? Okay, 2021, they did, oh, come on, income statement. They did 39.2 billion with a B. Trailing 12 months, they did 42.3 billion. So that is over a $3 billion increase in revenue, or yep, in revenues. And the stock is trading at the same levels. So again, that's where you got to make the decision. Something you could also do, I mean, it just depends on your depth of research. Also, look at the shares, history of the shares outstanding. You can see back in 2019, there was 398 million shares available. Now there's only 386 million shares available. That is a decrease of over 12.09 million shares, and it's going down, which means the pool of shares is decreasing because institutions, hedge funds, people like you and I, people who buy the S&P 500 are buying the shares and holding on to them. And it just goes to show that there is natural and organic interest. Now, so that's part one, is doing this analysis. Is the business doing good? Yes. But you also want to just know, is the trend your friend? Because you could have the best stock in the world. Think of Celsius, for example, the energy drink. They are absolutely crushing it, but the stock is getting hammered. And it's not because the stock is bad and sales are bad and revenue is bad and it's going to go to Hades in a handbasket. It's because the trend, baby. And good gravy. Imagine if you bought this in 2012 at $46, you would have made 1000x. Okay. So the next part is charting, which is my absolute favorite. And we're just going to make it super simple and easy for everybody. Okay, why didn't that? All right. So you can see we're basically, and I'm gonna have to just zoom out a little bit here. we're basically in this channel. Now you're probably saying, Ryan, why did you choose those candles? Well, we're at an all-time high here. The stock has never broken above this top line here, so never broken. It tested this 3 times. Tested it 3 times and still has not broken it. Now this bottom candle, why did I choose that bottom candle? Because you can see this is trading in an absolute range. And when I say absolute range, it's just something you can visibly see with your naked eye. And what confirms that is this beautiful 10 out of 10 chef's kiss. Just perfect, rare, almost medium rare, best steak you've ever had with the best size you could imagine. Maybe it's little potatoes, seasoned potatoes that are with butter, or it's asparagus or veggies, or maybe it's the best food you ever had. I don't know. Anyway, this confirms it here. This also confirms it here. Acts as resistance, acts as support. And now let's see how it acts as support down here, this line. Test, 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 test. Falls through. This candle right here says, ahaha, there's a line here. There's a line here because it doesn't break this line, but it's right, its butt is right up against it. And then this next candle breaks above at almost about an 8 out of 10 support. This candle just bloop. Then it tests right here. 10 out of 10 test right here. Stock goes up. 10 out of 10 test for this red candle. Stock falls through. This stock comes up. This candle right here, 1,000,000 out of 10, perfect support. So now, as someone who likes to chart, you've got to be thinking to yourself, okay, my projection shows that there's upside. Institutions are buying at this level. S&P 500 is a pretty decent contributor to the volatility of the stock. Could this break right here on this third attempt? Potentially. When's their earnings? Let's see. Earnings already happened. So it really just depends on how this candle goes. But if it breaks up, I think we start a new bullish trend for this stock. And you can continue to draw lines and find absolutes with your naked eye. And I'll go ahead and do one right now. Like that. That was super easy. You're like, why did I do that? Well, look at this green candle right here. 10 out of 10 resistance. This candle right here, 10 out of 10 support. Beautiful test. Beautiful test. Beautiful test. Beautiful test. All this fun stuff falls through. Tests right here. Breaks up. Tests the resist or tests as support. Tests as support. 10 out of 10 support on top of this channel. And I'll just make it a different color because we're talking about this purple here. Just absolute 10 out of 10 support. Falls through. Tested as support. Resistance. Great test. 10 out of 10 resistance right here. Butting its head up. You guys can see that. Tests it. Fails. Tries to break through. Tries to break through. And it's failed. And then we have beautiful 10 out of 10 supports here. 10 out of 10 support here. 10 out of 10 support here, or test, resistance test. So now we're trading what this is called. This is basically, we've created our apex, the area of apex, the area of opportunity, baby. Come on. I really dislike my mouse. Right there where we have this resistance butting up against this purple support. Again, typically the lower part of the channel, which is, this is a channel, this is a channel. The lower part, which is this is the lower part, this is the lower part, is the support. And the upper part, which is this part or this part, are the resistance. And you can see there's a lot of resistance right here. Double resistance, in fact. So potential for Thermo Fisher to maybe come down, or if there's some news, maybe insiders buy, CEOs buy, you never know. It breaks up and we start a new major run on Thermo Fisher. So now what I would do is I would go to my master list. You can call it whatever you want. I wonder if I already have TMO in here. Bloop, bloop, bloop. I'm going to say I do. I don't have TMO. Okay. So what we're going to do, we're going to go all the way down. Whoops. All the way down right here. TMO. My alert date to check back into this stock. I would actually want to see what it does later this month. So I would check back in 10/1/2024. With the caveat of typically, I would say 9 out of 10 times, I would put the apex state. But if we have a breakthrough here, then our next area we're going to want to watch for is breaking our all-time high right here. So breaks up, and then it needs to break 667, and then potentially after the races, depending on what is behind or what's the catalyst. So that is how you can really analyze stocks. Again, let me just show you an example of how to weed stocks out. This one, gosh, people get really emotionally attached and upset when I call things out, but it's so true. This was one of them. So for this company, you can see they make $1,490,000 a year, but they're losing 258 million. That is a no-go, my brothers and sisters. You don't like they're losing 250, they're losing so much more money than they're making. Automatic disqualification for me. Put this one on the list and check back on it in maybe 5 years, 3 or 4, 5 years. But they've never made more than $3 million. They're adding more shares to the pool. In 2023, they had 37 million shares. 2024, they have 77 million shares. This is just something you definitely want to stay away from. Quick ratio of 0.12, again, just goes to show. Let's look at their debt. I mean, it doesn't matter because if a company is losing so much more money than they're making, it's automatic disqualification. Okay. 83 million in debt. They're making 1.49 million. Again, put this one on the back burner. It doesn't mean it's a bad company at the moment. They're going through challenges like every company did. Microsoft, Amazon, Tesla, Netflix. Every company goes through challenges, and this one is also going through a challenge. It just depends on if this one will survive the road ahead, because they're burning 258 million. Where are they going to get their money from? They're going to get it from institutions and people who invest. They're going to pull money out of the stock. And what we can do is just Control F and just search for the word offering. So they haven't done an offering or dilution. Ditch these 3 diluting EV stocks before they hit 0. Receives non. So I don't know if they've done a. Let's see, purchase. Yeah. So again, that's another way to just check if they're diluting the stock. Just do a Control F for offering. So that's again super simple. And then you have stocks like this one. Again, I'm very biased. I like this stock a lot, but I'm just using this one as an example for everybody. Okay. So they make 303 million 2024. 2023, they had 310 million. So they're not on the right path to grow. It looks like they've hit their top in 2023. They're losing 19 million, but you need to take into account, are they on the road to profitability? And the way you can see if they're on the road to profitability is going down to the income statement, go to their net income, and you can go to, if you have the option to go to quarterly, I don't know. And just look here. So Q1 2024, they did negative 570,000. Q1 2023, they did negative 2.5 million. Q2 2024, they did negative 2.6 million. Q2 2023, they did negative 760,000. So you need to weigh out those pros and cons, where you think this type of company is going to go. This is a gaming app company. So there are a lot of factors you need to take into consideration. So that's basically a comprehensive stock analysis. Oftentimes you'll be able to determine, okay, they make 303 million, they lose 19 million. Not the end of the world. However, if they were losing 1.9 billion or 500 million, it would definitely be a beige flag, maybe a red flag here. But that's where you have to take that into account. So that's all I've got for you guys. If you have any more specific questions around comprehensive stock analysis, creating a screener, or just any other specific data points you think would be good. Maybe how to spot or find good dividend stocks, how to spot or find good biotech stocks, how to spot or find the next Amazon. I have videos for those actually, and you create screeners for that. So let me just show you for an example. And the way I create these scanners is I go back in time. Oops. I go back in time and I look at what Amazon or Tesla was doing to potentially be in that same financial picture to where we get stock. So, for example, buying Apple at $16, this is exactly Apple's data points when it was $16. And we get a stock here, a Brazilian company. Is this the next Apple? I don't know. That's where research has to come in. Is Afia the number one education training service? Are they growing? Are they in other countries? Are they creating licenses? Does the stock chart, let's just look it up. Does that align with the business? Oh, I've done this one before. So many factors. So many factors. So let's just do another one for example, because that only has one. Potential 20x stocks like Nvidia. Before Nvidia did a 20x move, these are the same data points that Nvidia had. Now we have three results. We have Mankind. I'm actually really bullish on Mankind. Peloton, no. They might be getting their stuff together actually though. Standard BioTools, Lab ticker symbol. Let's just look at Lab. I'm just interested. Is this the next Apple? I don't know. Let's see. Let's just see what we got here. Let's test our comfortability in finding stocks. Okay, so this stock used to be 45, 50 bucks. They make 136 million, but they lose 164 million. So that's something that's kind of a beige flag for me where they're losing more than they're making. However, we can see insiders are buying a lot here. So we're going to look into that. They have a quick ratio over 1. Gross margins, 46%. That is great. Sales past 5 years, barely down. EPS past 5 years, decent, I guess. A lot of shares outstanding. Ooh, 2023, they had 80 million shares. 2024, 371 million shares. So it sounds like they are probably going through a restructuring at the moment. However, I'm guessing I'm guessing these insider buys were after they diluted the stock, where they basically added more to the pool. We're going to take a peek. So they do have debt, but they're addressing it aggressively. Let's just take a peek. Woo, mamacita. So it's not the CEO, but it is Caston Partners Master Fund, and the last they bought was 10-ish days ago. I'm recording this on not October, September 8th. Gosh, look at these insane buys. So that's pretty incredible. Q2 this year they did 37 million, Q2 last year 27 million. So they grew 10 million. Q1 last year they did 25 million, Q1 this year 45 million. Ooh, but look at they spent a bit more than they did last year. So their gross profit is actually up only 1.3 million. Still good, but just something to also consider. And their balance sheet, I'm hoping they have good cash on hand and assets. Dwarf liabilities 5-1. Let's see. Assets 708 million, liabilities 198. So yeah, almost 3.2 to 1, 3.5 to 1. So that's fantastic. They have 269 million in cash. Their debt is low, 300,000. So I mean, this is again, this is a nice one. I don't think it's the next Apple at the moment. Definitely not. This is definitely a penny stock because, I mean, they're losing more than they're making. But if I were to take 136 million sales and divide it by 371, I mean, that's definitely penny stock territory. So not even worth diving into, but that is, again, just kind of an example. So if you made it this far, consider subscribing, engage with my channel, give me a thumbs up, thumbs down, maybe a comment. It does let YouTube know that this type of content should be pushed to others. Thanks so much for watching. Hope you're doing well.